Mkolisi Kebe, the co-founder of Vutela Technologies Ltd Eswatini. Here I'm responding to some of the comments or requirements of other traders. I've uploaded a scalping strategy using the Ichimoku and the moving average, and others are requesting on how they can use the MACD indicator, which is formerly called MACD indicator. So in this video I will share a strategy on how to scalp using the MACD indicator. So stay tuned as I am elaborating and explaining. Before I begin, make sure to like the video, subscribe to our channel, so that whenever I'm posting a different strategy, you'll be the first person to know and follow that strategy, and you'll benefit in your journey of trading. Also, you can share the video with all your friends so that they can also benefit. So thank you so much, guys. Let's begin. Yes, so the MACD has three parts. The first part is called the MACD line. The second part is called the signal line. And the third part is called the histogram. So, follow me as I am explaining each part up to a point where we will place a signal together and see if the strategy is really working or not. So I will start explaining more about the MACD line. So the MACD line is 12 EMA over the minus 26, and the EMA is the exponential moving average. So the signal line is 9 exponential moving average. Then the histogram is the MACD line minus the exponential moving average. So if you want to have you want to see an illustration of a drawing, we have the MACD line. It is just like this. The MACD line is just like this. It's simply a moving average, simply up and down. Yes, like I've elaborated, the MACD line is just a moving average like this, followed by the signal line. It is also following on the MACD line. Then we have what we call a histogram. The histogram is just a line. With some short histograms, some like this, and some are short, some they coming taller and taller and taller. So not like this. The histogram should be like this. There is this line, then you see the histograms all along, then they come shorter, taller, something like this. So this is how the histogram is. Yes. Then so let me remove one window and add the MACD line, so that we talk of something that we can see. So here is the MACD line. It is a 12 EMA, the minus 26, 12 EMA minus 26, then the signal line, it is 9 EMA, 9 not 9 SMA. Then here is the MACD line that I was talking about. Let's check the color here. Let's check the color here. The histogram should be green. The signal line should be green too. Let's click done. Yes, so this is what we call the histograms, and this is what we call the MACD line. Yes, so that's it. That is how. So the reason behind using the MACD line is that MACD line is not a lagging indicator, it is a leading indicator. The lagging indicators usually they tell you after the market has been moving for some time, but the MACD line, is able to detect the movement of the market before the market has moved even further. So that is why most traders, they prefer using the MACD line. So I would conclude briefly that MACD line does not lag behind the price action. So please allow me to illustrate what I've just said. So let me illustrate below. So to show you exactly that the MACD line does not lag behind the price action, let us add two moving averages on our main chart in this chart here. So we will add two moving averages, then we will proceed with our conversation. Firstly, I will click here, and in the main chart I will click moving average, this icon. Then I'll click on the icon, and I first insert the 26 period. Then here I will change to exponential. The shift I will put 0, and I will leave the color like this and click done. You see, and then our second moving average, here I'll click on the main chart, and then I will click the moving average. I will insert the period to be, let's make 12, and exponential. Then we change the color to let's use the navy blue. Then we click done. You see, and so here is how it looks like. Yes, so if we observe below, in this window here, we only have the MACD, and also we have the MACD line, which is the green line, this line, the green line, called the MACD line. So currently we need to add another moving average here. So to boost my illustration, let's click here, and on window 3 we will add the moving average, which is exponential. Let's make it to be how much? Let's make it to be 20, and then the color should be, that one is green, let's make it to be orange. Let's make it to be orange. Then we click done. So now we have another moving average. We have a moving average at the MACD window. So yes, so let's see this illustration too, so I can assure you that the moving average is a little bit accurate as compared to the other indicators. Now let me look for a pointer. If you look here at this level, the moving averages have crossed here, and also if you let's add another pointer. Okay, let's add another pointer here. If you look here at this level, if you observe exactly here, if you observe exactly here, the moving average is on top. They have crossed later than the MACD. The MACD line was the first to detect the movement of the market towards the other direction, which is the upward movement. You see, so the MACD line is okay. Let's go to 1 hour time frame to see exactly what I'm talking about. You see here the MACD crossed a little bit earlier than the moving average is on top. The MACD crossed a little bit earlier in this region, and the moving average is crossed a little bit later. If you move backwards, it is still the same. It is still the same thing. The MACD line here is what we are referring to. The MACD line the MACD line was able to cross here to detect a buy, but the moving average here, it couldn't cross. You see, so the orange line is the one that is alerting us for any movement, which is a positive movement or even a negative, like when I'm talking of a positive movement, I'm meaning the long positions. If you can also observe here, the MACD line crossed earlier and the signals line crossed a little bit late. So whenever one is trying to trade here, you see the MACD line is you see what I'm talking about here. It crossed later and the MACD line crossed earlier. You see, so the MACD helps one to detect the movement of the market earlier in this region, and if you can place a buy here and the market moves, then the moving averages will cross in this area, and you find that you're already running on good profits here when the moving averages were firstly detecting the price. But the MACD line will have just told you earlier that now be aware, the price is gonna move higher. You see, you will be able to place a trade as soon as the MACD line is alerting you in this candlestick that no man, please buy here. And also the moving averages will alert you in this region here that you have to click a buy. You see the difference of the pips. So the MACD line is a good indicator for scalping and also for holding long positions. So That is why many traders, they prefer to use the MACD line. So yes, so now let me clean the chart so that I only remain with the MACD, because the only thing that I need here is the MACD, the MACD line. So let me clean my charts so that I only remain with the MACD. Here I was just showing you that the MACD line, it will be able to give the MACD will be able to give us accurate signals for scalping so that we can make some good returns. Let's go back to our chart. Only we have the MACD on our chart. So for the sake of education purposes, please allow me to open the BOOM1000 index. Let's use the BOOM1000 index for our illustrations below. So it's still loading. Yes, so if you look here, when the market spikes, the histogram will go above the zero line. So it will start small and then longer. And also when the histogram, I mean when the market, or when the spikes, the market goes down here, the histogram will also decrease. If it passes the zero line, it shows that it's still going further downwards. So this is very simple if you can understand with the what we call divergence. So if we talk about divergence is able to tell you the true breakout. It is able to tell you the true momentum and also the true reversal of the market. So when we talk of divergence, it is when the market is able to tell you the exact ending points of the trend. So in this strategy, you need to identify the divergence when the market is still going to the same direction, or there is a breakout, meaning the trend continues. So here, ladies and gentlemen, if we connect, let's say we connect these spikes, we connect them here with one straight line, and also we connect the histogram here, the points, and let's say they are 30 degrees or so. It means if they are the same here, it means there is no divergence. Please kindly note that if there is an angle difference between two lines, it means there is divergence. But if there is no angle difference between two lines, it means there is no divergence. You see, in this case, if we can closely calculate the two lines I've just drawn here, the two arrows, there is the angle difference. It means there is divergence. So if you draw this line here, and you also draw another line here, you see this line is almost horizontal. Let me erase this one, it's not accurate. if you draw this line here, it is if you draw this line here, it is slanting, and you see this one it is almost horizontal. What does this mean? It means that you can enter a trade somewhere, meaning the market is diverging. So another example here, we can draw a line here, and then we draw another line here. You see here the line is a little bit slopy, and here the line is almost horizontal. So what we're gonna do, we will enter our trade here. Why are we entering our trade here? It is because the lines so that is how if we enter a trade here. You see, you will scalp, and you observe the MACD line here. If the MACD, before the MACD line touches it touches the zero line here. Before the MACD line touches the zero line here, you just exit that trade, and maybe a spike will, so that you must stay safe. At least you must count something like 5 candles to be safe. You enter on the third candle, like I've just said, you can enter here, then you exit here. You see, in that way you can scalp. Make sure you observe the rule of divergence before you do anything pertaining scalping the market. So this strategy, guys, it is really good for boom and crash 1000. The 500 boom and crash 500 is not good, because those indices, they have a lot of spikes. So for you to stay safe, focus on the boom and crash indices. So here sometimes it happens that if you connect the lines, if you connect the lines here for instance, and you connect the lines here, let me see, it's like yes, let's use this example. If you connect the lines here, and you connect the lines here, sometimes you find that the spikes are horizontal, almost horizontal. Then the histogram is slanted. You can also enter a trade, that is a selling trade here. You enter, you sell here, you observe the market giving you some pips, and then you move out. You don't stay longer, because it's just a scalping. Even here, if you checked here, and then you checked here, it is slanted, it means that you can enter a trade in this direction. If you entered here, you will be getting a lot of pips. Entered here at the fourth candle, you enter, or at the third candle you enter, and you hold for the next 5 candles, then you exit the trade. You can make a lot of money, guys, with this scalping strategy. So ladies and gentlemen, because of time, let me end here for today. I will hear from your comments that were you able to utilize this strategy. This strategy is very powerful. Even you can also use the strategy of divergence when you are trading the Forex currency pairs, also the volatility pairs. you can also utilize this strategy, but make sure you don't change the default settings of the MACD and also the MACD line. So ladies and gentlemen, thank you so much for your attention and your time. Please like our video, leave the comments below, and also if you still do not have the deriv.com account, there is a link below. Please register with us and support us, like our channel on Facebook, and also follow us on Twitter and Instagram. Thank you so much. Let's meet to our another video. Thank you.